Hello, welcome back. So the last time we talked about the financial market and the market that makes up the financial market. Today, we shall be picking the first market, which is the stock exchange market. The stock exchange market is simply a market where buyers and sellers come together to buy or to sell the shares of a quoted company. Before we talk about the buying and selling of shares, let us look at the background to know why a company actually issues its shares to the public. Normally, before a company becomes a public traded company, they were private. But because of maybe they want to expand, they want to go into other regions, they want to acquire machineries and so on and so forth, they will therefore decide to go public. Why? Because the money they have as private individuals may not be enough to cater for all these voluminous projects that they have. So once they are public traded company, it means that the public can actually give them money for them to use in their business. So now, but this particular money that the public are giving them are not loan because they are not payable. The company that you give money for them to issue you their shares are not promising you that they will give you anything, and that is where people actually get it wrong. They think that buying of shares, that the company should give me profit, the company should give me dividend, the company should appreciate, and so on and so forth. But that is not the agreement you entered with the company when you acquire their shares. The company is not promising you anything. The only thing the company is promising you is that they will be trying all their best to make sure they are going concern. That is, they will remain in business. That is the only thing, and they will do good business practices. So now, when the company wants to expand or they need money, they come to the public and the public subscribe to their shares and they issue these shares to the public. So now you now become part of the owners of those companies. They have given you some parts of their shares in exchange for your money. So the higher the shares you have, the higher the stake you have in the company, and the higher power you have in the company. So buying of shares is one thing, but knowing the background reasons why companies actually issue shares will make you understand this stock exchange market that we'll be talking about in details. Now, you have understood the reasons why companies issue their shares to the public. Let's now talk about the stock exchange market and the types of markets under the stock exchange market. In this particular stock exchange market, we have two categories of market that makes up the stock exchange market. That is the primary market and the secondary market. Under the primary market, you can see it as a follow-come market. While the secondary market, you can actually call it Okreka market or Tokumbo market. Don't mind me, I'm joking. But now that is the basic way to understand it. So the primary market is a market where you buy the shares of a company first hand. That is maybe through their initial public offering, the IPO, or through any other means as accepted by law. That is the primary market. Take for instance, you want to buy an iPhone and you go directly to the manufacturers of iPhone and you purchase an iPhone, let's say for 1 million naira, and you bring it back. That is what we call the primary market. In the primary market in the stock exchange, you don't sell, you only go to buy. While in the secondary market, this is the market where you buy and you sell. This is now the normal market that we see around us everywhere, where that shares or that portion of stock you bought at the primary market, you come to the secondary market now to trade it between other traders, between other shareholders that need that particular share that you have already purchased at the primary market. So when you come to the secondary market, you now trade that financial instrument that you bought from the primary market at the secondary market. So in the secondary market, you have buyers and sellers buying and selling. This time around, they don't have anything to do with the companies that own the shares. We are not trading between ourselves. At this point, you are reselling what you have already gotten from the primary market. Another person is there to buy or to sell that particular financial instrument. That is what basically happens in the secondary market. And most participants in the stock exchange market are always found in the secondary market, where they are buying, where they are selling that particular shares. So these are the distinctions you need to understand before you go deeper into the stock exchange market to understand all other stuff that make up the stock exchange market. I believe that this basic understanding that we are building will help us when we get deeper into the stock exchange market. Thank you. I will see you next time.